Hello and welcome on this Monday morning as we talk about trading with technical indicators. My name is James Boyd. Alongside me in the chat is Cameron May, a fellow instructor. We welcome him. We got many of you from all over the place. We got Coeur d'Alene, Idaho. We got Ohio, raised in Spain. I'm in Salt Lake City, Utah. We're all over the place, but we're together here online. So we welcome all of you here today. And also we got my good colleague here, Jax, to help us out as well underneath the table. All right, a little fun there. Some of you asked, so I'm just kind of telling you he is with us. Now, just real quick as we get started, want to give us a quick reminder that this is not a one-off class. We meet every Monday at this time. So if you're ever wondering, geez, how do we trade with technical indicators? Okay, like moving averages, MACD, any oscillators, whether we use scripts or scans or whatever, that's what we do on this class. Now, today's going to be a little unique because I don't think we've ever been in the situation that I'm going to show you here today. It's a good situation, but it kind of maybe seeds a potential problem, and you will see that just momentarily. So today's going to be a little bit more trading oriented. Hopefully you don't mind, but I don't think you come to class to just learn theoretical anyway. So we're going to talk about kind of more trading here today, past and future positions. Now, the information here we talk about is provided for general informational purposes only. Options carry a high level risk, not suitable for all investors. Some of our trades will be stocks, some will be options to kind of get a balance there. Also remember that when we show examples, we will be using the Paper Money software application. Also remember that investing involves risk, including loss of principal. And also want to give us a quick reminder for many of you that attended the Anaheim Market Drive. Hopefully you enjoyed that, and many of you did. And also coming up, want to kind of give you some idea of other events. And you're going to see if you go to schwab.com/events, okay, that's a website. These are 3 examples of upcoming events. We'll be in Miami, September 27th and 28th. We'll be in Santa Clara, October 12th, Denver, October 18th and 19th. You're in those areas, come check us out. Okay, live, meet some local investors like yourself in those areas. Make sure you go to schwab.com/events. These are free events, okay, on different topics. So check those out. Just want to give an update there. Now, and by the way, these are not the only 3. If you go to that website, you will see many, many more. Now, I want to go into something just real quick. So first off, this is the page we actually have on YouTube, okay? If you type in Trader Talks by Schwab Coaching, it will get you to this page. We also have a playlist for this class, bookmark both, okay? And if we actually go to this page right here, I want to kind of give us an idea of what now Atlanta, we typically come to about twice a year. So stay tuned for that. I don't see any Atlanta, but I'd probably say January would be most likely, okay? Now, last week, so this is the playlist, think like TiVo, okay? Last week, we talked about 1 scan to see bounce setups. That was last week, and I gave you a homework assignment. I want you to identify some bounces. Now, if you did that homework last week, you probably enjoyed that, okay? If you didn't do the homework, well, you didn't enjoy it, okay? So we'll come up with some examples here today using that. And we talked about kind of adjusting the moving averages and also adjusting the number of bounce days that you want to in confirmation. So the class that we do here today will just be added on top of this list. Now, I want to kind of go back to something just real quick. What I want to do is I want to talk about current positions. And I want to talk about with this, when we talk about current positions, we're going to bring up market sectors with that, okay? Then what we're going to do is we're going to talk about some new positions, okay? So we got kind of a little problem, okay? And the first example that I want to look at, and I want to kind of talk about this in terms of indicators, is we have a stock, okay? The stock is IBM, and we're going to see that we have a long call position on IBM, okay? And there you're going to see this, okay? 32 days remaining. The number of days remaining doesn't tell us the whole picture, okay? What you're now going to notice is the stock is at 217 and we're literally at 195. So if we were to bring this up on the option table itself, okay, and we're going to see there's our position. We're on the 18th October, okay? There's the position. And now we have about a 90, almost a 90-ish delta. Now, when we start getting this deep in the money, okay, at the money or in the money, in the money, in the money more, in the money more, in the money mostest of what we can see on the table. Well, when we can start going deeper and deeper in the money, that bid and ask spread tends to widen out. And we also tend to see the volume shrink. And you'll see that all that activity is the at the money or out of the money. And the ones that are deeper in the money or lower on the strike price, the one that we have only has 12 contracts traded in the entire world. Literally. Okay. Now, we got a situation with this. Okay. So this is where the entry was. It was right there. Okay. This triangle right there represents really the 5-day low. Okay. So in other words, if you were going to, let's say, set your stops at that 5-day low, it's incrementally gone up over time. Fine, we can see that. The problem with this is we don't really see in this case, the stock is way higher than, okay, that 5-day low that I'm pointing to. Have you ever had this happen where you say my stop is way down here and my current stock position is way up here? How do I protect my profit? Well, I want to kind of talk two oscillators for just a moment. Number one is the RSI, okay? This is not relative strength. This is like a sentiment of the stock being overbought and or oversold, okay? Overbought would be actually 70 or higher, and then 30 or lower would be oversold. Between 30 and 70, more neutral sentiment. Now, if I back this chart off for just a second, tell me what you see on this graph of the RSI. Do you notice anything? Okay. Now, as I'm kind of getting some comments, you're going to kind of notice that when we take a look at this, we had some prior highs where we were here, and the RSI was probably about 80. Okay. You look at this point right here, January timeframe, that RSI almost went to about, well, it was probably like 89-ish, and it popped up on earnings. Okay. We even got above where we were before, which is about 82 or 83. And then today we actually are probably pushed, well, we're at 81, probably we're at 82 when we were at the high today. Now, if you also look actually down at the bottom, okay, I want you to kind of see the differences here. When you look at a stochastics, okay, range being from 0 to 100, we're at bloody 94. Now, could you go up higher? You could, okay, but you kind of get into a situation where maybe you're kind of so overbought to the point where the likelihood of pulling back becomes higher than the likelihood of going up. Now, if we pull back, it doesn't mean that it's downtrending. It just means that it could be flagging and or pulling back. That's what I'm submitting to you, okay? In this example, what we're going to do is with that extreme reading on the RSI, what we're going to do is we're going to profit take. Number one of the things that makes us want to profit take is the fact how deep we've gone in the money. Now, if I were to kind of re-show you again where the entry was, and this is going to be a big theme of what we talk about today, where was the entry? The entry was right there, okay? And if we said, hey, what was that day? Well, that was your close above the high of the low day. The lowest, most recent red candle was there. And if you look at actually what happened, that was Cahold, this was Cahold, that was Cahold. So we really got on day 3 of Cahold when both the moving averages were green. Now, so we can kind of speed this up a little bit. So you're going to notice that just because we have 32 days left, that doesn't mean that we have to stay the next 32 days, or I'm going to stay closer to expiration. Doesn't really affect us on this position. We're deep in the money with almost a delta of greater than 90. We're at an RSI level, piping hot, almost like we're pouring steel, okay? So this position, $1,800 worth, that was initially a $585 investment. That $585 morphed into $1,800, okay? Now, did we overposition it? We did not, okay? This one position, if we can grab that gain of $1,800 on this account size, okay? I mean, let's say it was $1,800 bucks. let's say it was 65,000 when we first got in. This one position moved the portfolio value almost 3% in one trade. Pretty solid gain, okay? Now, what we're going to do is we're going to right-click on that, create closing order. We're going to sell it, okay? We're going to sell into that strength. Now, this is not to say that we're never going to get back in. No, just looking kind of for a little pullback. Get something where the RSI or the stochastics kind of comes down a little bit less, maybe in that neutral range. Try to get a rebounce on the moving average. That's all we're trying to do, okay? Now, we're going to try to sell at 23.85. Confirm send. Note the commission. Send the position, okay? The order does fill. We capture about that 1,800-ish bucks. And the paper money's account says, spank you very much. Now, I want you to kind of notice something. So we're going to close that area. So if we look at the margin account and we said, okay, how many stock positions do we have? 0. Okay. When we actually pull up the rest of the account, okay, vertical section, ADI, what do you notice? Caterpillar, what do you notice? Goldman Sachs, what do you notice? IBM, what do you notice? And if you look at this one right there, Meta, what do you notice? And you look at NVIDIA, what do you notice? Now, when I ask a question 5 times, it probably becomes pretty obvious. All of our positions outside Apple is in October, they're all falling on this week's expiration. On Monday of the expiration week, the goal is to be gone, or you plan to hold expiration. To me, it's kind of more binary, okay? You're either going to get out on Monday or you plan to hold expiration, okay? Now, when I take a look at this position on this IBM right here, we're also going to get out. We're deep in the money. It got above both strikes. That is a long call vertical. I'm not going to bring up IBM on the chart again because we already saw that. We're going to right-click on that, create closing order. So on IBM on this account, that's another $574 on IBM. Okay, a lot of people say IBM doesn't move. Well, not so, okay? So that was about $2,400 on just IBM. So you can follow along. When was that trade placed? I'll give you the date on 8/8. So I'll go back to the chart. Where was it on 8/8? 8/8 was about right there. So if we kind of had to say, well, what was the entry on that? Okay, using indicators, tell me what it was. Well, number one, that was a hold date. Again, that was actually where the 10-period moving average was green. So some might say that's a little bit more aggressive entry, but that's kind of the earliest entry we would take, given this position. And that secondary moving average was not green yet. Neither had the moving average crossed. So if we said, what indicators should we use? Hold, number one. And with that, the 10-period moving average was green. I'm going to ask you that many times today. What indicators do we use to take these entries? Now, what we're going to do is we're going to right-click on that, create closing order. Spank you very much. Try to get filled. Confirm send. Note the commission. Send. Okay? Now, if I went back to the ADI, are all of these positions going to be winners? The answer is no, they're not. Okay? Now, for time's sake, ADI, it's down about 87 bucks. Okay? Stock's down a little bit. We're in between that 220, 230. I don't have a whole lot to say on this one. We're just going to kind of take that $87 loss and shut her down, okay? Try to get that filled. Get it off the table. Now, when we look at, let's say, Caterpillar, okay, what type of trade is that? Type of trade we got on Caterpillar. You got 2 puts. We know that. The question is, do we buy the higher strike or sell the lower strike? Well, if you sold the higher strike, that would be a short put vertical. When was that trade placed? 7/29, okay? If I go back and really take a look at this, let's kind of see what Caterpillar's done since 7/29. Let's pull it up, 7/29. What was it? It was, looks like a trade before earnings. And that trade before earnings was about, let me kind of take that off so we can see a little clearer. 7/29 was right there. Right here. So that was a trade before earnings where probably we thought it was going to go neutral. Okay. And if you look at where we are now, fast forward in the number of days, we are pretty much right at where we were on 7/29. Now, if you called up a friend of yours and actually said, you won't believe it, I did a trade expecting kind of a neutral range, it went neutral, and I made $252, they would think it was a scam. Okay? That's probably what most people think. But on this type of trade, what you're going to notice is that's kind of what it's designed to do. Time decay. Okay, not decay, decay. Okay, right click, create closing order. We're going to buy it back. Now remember, with short put verticals, you like to sell for big credits. And some people might say, I like big credits and I cannot lie. And they like to buy back when those debits are low, keeping a bigger portion of the credit, less the commission. Okay, so there's what we did there. Now, what kind of problem are we running into now? Well, kind of the problem that we're really running into, ADI is not filled yet. Let me try to move that. The problem that we're running into is, and you guys might have had this probably happen to you before, James, I'm kind of like doing well on my portfolio, but I'm starting to run out of positions. Okay? So I want you to imagine that you go into a store and the item that you need, the shelf is empty. Okay? So there becomes a problem. So how do you fix it? Well, number one is you kind of have to stay out in front of it. If you're bullish the market, right? It's probably not a bad idea to have some stock positions, number one, that don't expire. That's why some people probably trade stocks and invest in stocks. Number two, don't have all your positions in the same expiration week and or month. In both of these accounts, they are top heavy in the expiration, which is this week. ADI does fill. So that's we're just kind of seeing the result of not having enough stocks and or not having enough expiration differences. Now, when we look at Goldman Sachs, I'm going to leave this here, okay? The reason I'm going to leave this, we've got a 45 for it, 490. We're pretty close to being at the money. If we're thinking that staples, financials are going to bounce, this might get some luck and try to bounce to the upside. Let me show you what we're seeing in that sector right now, okay? When we pull, let's say, the sector of, let's say, financials, IXM, the reason why I'm not going to take this position down is when you look at the financials itself, we actually, in the shorter term, made a higher high. Goldman Sachs being one of the holdings in the financial sector, if that sector breaks to the upside, might get some help on Goldman Sachs. But, man, we don't have a whole lot of time left. Right now, we're down $82. Okay, this could be all or nothing. We're going to hold this expiration and see if we can't get the sector to carry Goldman Sachs up higher. Meta, the same thing. Okay, when you pull up, let's say that stock looks like a decent bounce. So far, it's okay. Going to hold that to expiration. And this one right there, what you're going to see is on NVIDIA. That is also a short put. It's at the 116, have about 71% of the maximum gain. When was the trade entered? It was entered on 8/13. Let's go back to the chart. What was the entry signal given? 8/13. Let's go back and take a look at this. It was right there. Okay. So if I went back and said, what type of entry was this? Well, the entry kind of was more by like a diagonal breakout. Would you say that's fair? Right? So if I went back and constructed this, which, by the way, this would be a good opportunity for you to do this in your own trades. What was this? If someone gave me this and said, hey, I got in, what do you think of my entry? I'd say, dude, you nailed the diagonal breakout. Okay. Now, what you're going to notice is over time, that stock ran up, fell back down. By the way, how much more did it fall back down? About $10. What type of trade was this? It's a short put vertical. So that's not very sensitive. If you go down about $10, that's not going to kill the position. And if you go back and look at this, this is the second trade where this is the entry, diagonal breakout. This is where we are now. The stock barely moved. And how much did we make? On this one, a little bit less, $135. Okay? So not as much compared to the other one, which is about $250. We're going to buy it back. Okay? And now the question really becomes, might we roll the position? Okay, so now this is where I'm going to turn and talk about new examples. So first thing I want you to kind of take away from, what's the value of coming to this class? Look, the moral of the story is you can learn about markets in general, and there's a lot of different topics to learn. What's more interesting is when you see someone display it in front of your face, live and recorded, and watch that person manage the portfolio over time. I learned in basketball that I could be an incredible shooter in practice. However, shooting in a game is totally different. What I'm trying to do is shoot in a game where we have the pressure of tracking the results over time statistically. Now, some people don't like to track results because then they feel like there's pressure. I love pressure. Without pressure, you don't make diamonds, okay? So the bottom line is when we look at our portfolio now in this margin account, we got no stock positions. We'll drop that off, okay? So now we got a problem. We got no short puts, no cover calls, no callers, no synthetics, nothing, okay? We only have Apple, which is down a little bit today. Caterpillar actually dropped off. Goldman Sachs is staying to expiration. That one drops off. And the other ones down there, futures and Forex, it doesn't apply to this class. So we're almost bare. Okay, so now what we need to do is to take what we've been learning about trends, oscillators, scan scripts, and now apply. So this is kind of like the grunt work, if you will, of the business of the world of investing and trading. Okay, now here's what we're going to do. We're now going to ask the question, where do we have some growth areas in the market where we could see some of the trends and those setups? Okay, well, so let's kind of go back. Now remember, this is not like a one-off. If I were to pull up, let's say, the Dow Jones itself, it would be hard not to see the Dow Jones hit a brand new high here today. So something in those Dow components gave us a little love here today. What stocks gave us a little push, okay, in that space? So that's number one. The Dow leading to the upside. Now, if we take a look at, let's say, the S&P 500, is it bearish? We can't say that. Notice that the S&P is kind of right up near that prior high and up near this prior high. And by the way, I would say something here, okay? Knowing what I know, I would like to listen to someone who tracked the portfolio and compared it to a benchmark to see, based on what they're teaching, are there statistical differences, good and bad, okay? That's important, okay? Very important to do that. Now, when you look at the S&P, which is our benchmark, which we'll go more into tomorrow, okay, is it bearish? Are we at a level of resistance? Do we think it's just going to fall over? Well, we can't say that the MACD is at all-time highs. Can't say that, okay? Some matter of fact, like when the MACD is not as high when the price is near the previous high and or resistance. So if someone were to say, what's the expectation on this? Might the S&P break out? There's becoming increasing prospects of the S&P going higher. Now, we said last week, speaking of indicators, when we look at that 30-week moving average there, and we look at the 30-week moving average, that is still tilted to the upside. Again, what does that tell us? About trend, okay? Now, we can see, number one, there's one high, there's two high, there's three high. We are looking at a weekly chart. And if you look at this low and you look at this recent low, this is really showing showing an ascending triangle. Now, what we have to get through our heads is every entry here, 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 here. All of them have risk. Okay? You think back here that there was no risk. You think back here there was no risk. You think back here there was no risk. They all had risk with it. So it doesn't matter if we get in here, there's still going to be risk. What you got to let sink through the melon, as we would call it down south, if you don't know what I'm talking about, ask someone who's from the south. We got to get comfortable taking the risk, okay? How much capital are we going to put in? Okay, what percent of the account are we going to risk? That plays a lot in taking the signals, okay? So we can't see the future. Okay, so the expectation is that the S&P probably could break higher. The Dow actually breaking to the upside is a good sign. And actually, if you take a look at, let's say, the NDX itself, is that coming? The difference in the NDX and the SPX is it's kind of more like a symmetrical triangle. You see that without me drawing that? Kind of like lower highs, kind of like higher lows, okay? Nevertheless, on the bottom of this, there is that little bullish divergence on the MACD. Now, I do not subscribe to the fact that the price has to be making lower lows and the MACD going opposite directions. I do not subscribe to that. Matter of fact, I'd even push back on it. If we get the MACD showing something like that, where the MACD is not down as far as it was before, okay, and I'm talking about here to there, we would even say there's a more bullish pattern if we get a higher low on the price, not a lower low on the price. If we got a lower low on the price had to drop down lower to get buyers to come in. But if we get a higher low, and that MACD is also higher than where it was before at its lowest point, the chances of us actually breaking to the upside become higher. And also, if you look at this, where we get a candle, not some thin little dojis or spinning tops, where the candles are the size of Eiffel Towers, joking, okay, that would be kind of viewed as a little bit more bullish. Okay, now I'm going to kind of choose, if you don't mind, a stock in the NASDAQ area, since we're looking at NASDAQ, okay? Now, one of the stocks that kind of caught my eye a little bit, okay, is a little Chipotle, okay, Mexican grill, okay? Now, if you take a look, by the way, they got some hot chicken at Chipotle. I about cried one time when I was in that great state of Ohio. I left the box of Kleenex, okay? Anyway, it tasted good. It was just a little peppery, a little hot, okay? Now, here's what I'm going to do. Tell me what type of setup we see on this chart. Now, if I were going to kind of draw, let's say, a level of resistance, might be right around there, okay? Now, what I'm going to do is I'm going to go back to Market Watch for just a moment, Market Watch. And if you don't mind, I'm going to make just a sample watch list for just a moment, okay? So in class, what I want to do is make a sample watch list, and these will be some stocks that we talked about here today on 9/16, okay? So first one I'm going to put in, if you don't mind, I'm going to put in a little CMG. Now, when we look at the CMG, these are the column headings. So in 25 years of investing, years upon years upon years of teaching searching, these column headings for us are the most impactful column headings because it tracks price performance, it tracks trend or momentum, it tracks volatility, it tracks implied volatility in technicals, it tracks relative strength, bounces, breakouts, crossovers, and timing of entries, all in one view. Now, a couple of the other stocks that I want to kind of put in here that we'll bring up, I'm going to bring up T-Moose. I'm going to also bring in there, let's say, MSFT, Microsoft. I'm going to bring in there a little Tesla. I'm also going to go back to just real quick, a little SPG. I'm also going to bring up Live Nation, a little different stock that we don't always talk about, but I want to include that. I'm also going to include a little RCL, Royal Caribbean, and I'm also going to bring up one, I will bring up one DVA All, okay? And another one I'm going to bring up is even like ResMed. Now, first off, ResMed is like the CPAP sleeping machines, okay? DaVita, we're talking about for dialysis, right? Those have been quite strong. So what do you notice in the list? Okay, now, someone about right now is going to say, well, how do I get this list? If you go to my X page, any column heading that I'm showing here is right on my X page. To prove it to you, so you don't think, oh, no, he's not telling the truth. If you go right to my X page, okay, right to my X page, right at the very top, you're going to see that right here, right at the very top, anything that I show on scripts is right at the very top, okay? Now, here's the deal. You can't expect me to do the work and then do it all for you. I mean, I would have died, literally, if someone said back in 1996, I'm just going to give you this, and all you got to do is copy and paste. All you got to do is type the thing in. I think that would have been a pretty fair deal. I'm a fair person. So is Cameron, okay? Now, bottom line, when you take a look at this, if we take a look at the trends, which we talk about every class, trend number 3 there, what do we got on that trend weekly? Okay, it's a 2. What is a 2? Diagonal breakout, okay? When we take a look at the short-term relative strength, 100, 100, 100, 100. So in the last 4 periods here, quite strong in that relative strength. And we also take a look at, are we hitting a 20-day high? Ding, 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 dong. Okay. And if we looked at the moving average crossover, it crossed over 2 days ago. How long have the moving averages been green? Answer, 5 days and 3 days. Reminder, this is looking at a 10 HC, the whole moving average, and it counts the number of days it's been up. Okay, now let's pull up actually CMG. Now, if we look at CMG, look at the implied volatility. Okay, the 60 number represents the IV percentile. Okay, now remember, when we look in this margin account that we have, my gosh, we're like bear now. Okay, there's like nothing. I'm going to go into the trade tab. And what we're going to do is we're going to look and see, is this something we might consider for selling the put on or just buying the shares of the stock? Now, you come to the October expiration, can you sell the puts over here? For $1? I don't know about you, but $1 doesn't really seem like that much, okay? Now, percent-wise, it does, but thinking I don't want to cap my gain to literally a blasted $1 for the next 32 days. This is going to be a stock position. Now, what we're going to do is we're going to come back to this, okay? And we're going to kind of look and see where these lines are, set up our first stock trade. So number one, we're going to take a stock position, and we're going to set a stop underneath that 30-period moving average that I'm pointing to. Now, remember what we said before, okay? We got to get comfortable with actually position sizing. Now, you might think, well, this is such a basic thing. I'm going to tell you right now, it's not, people don't do basic things. That's the point, okay? So if I were to look at this portfolio, okay, portfolio value, I'm going to do this fast because I don't want to spend the time on it, but it's important. 66,500, let's say approximately we have that. If I said the cap of stock investment, okay, let's say we were going to target, let's say 5 to 8%. So if I take 5 to 8%, and I don't care what indicators you use, you're going to be scared to take the entries if you don't have, okay, basic money management skills. So when we look at the capital investment, up to 8% of the account balance, we're going to put in the capital investment of 5320, okay? So I'm going to go back here, going to right click on this chart, buy custom with OCO bracket. Now, see the little pool balls right there? Click on them. Percent, click on it again, dollar amount. We're going to type in 5320. 5320 represents up to 8% of the capital of the account. How many shares would that be? 92. What would you do in this situation if it was you? Well, if it was us, and it is, if we're only 8 shares away from getting to 100, we'll take 6,000. We'll just do 100, okay? 7 more shares, only $300 more, okay? So we're going to push it to 100. Now, what we're going to do is if we're going to set it, if we're going to say what's the indicator? The indicator is a breakout. The indicator is a hold itself, okay? And if we take a look at this, what might be the level of resistance if we're going to set a target? What might it be? Now, if some of you like to kind of set targets and have a greater statistical chance to get to those targets, some technicians might say, James, I'm going to set that target right at 61.85, okay? That's the first line. It's not saying it can't go up to that level, or it will, but we're going to try to set at that first level right there. And then if we look at the moving average on the bottom, 54.31 less 2%, and we're going to have a stop at 53.22. Okay? 53.22, dated GTC. Now, we are more generous on the risk we're taking to the downside. We want to have a lesser likelihood of getting stomped out on purpose, okay? We don't look as much as the reward to risk as much, okay? We try to give more kind of downside fluctuation if it were to go down, and what you're going to see is we have like about a $4 move to the upside and about a $4 move to the downside, okay? So it tells you it's a 1-for-1. Statistically, we can kind of see what are the chances to go up to hit the target, or what are the chances to go down. What that does not really take into consideration is market posture and sector posture. Okay, it takes a look at the volatility of the stock itself. So if we saw the market go up, the sector go up, the industry grew up, It could increase the chances of the stock might go up to the target. Might. We're going to go confirm and send. Is this a stock or an option trade? Well, if you don't see an expiration or strikes, and it says stock, it's a stock trade. Okay? We're going to send the order. Nope, there's no commission. And with the stop order, there's no guarantee. Okay? Now, the question from BJ is that a 20-day high? So let's kind of go back to something. Let's go look at this. Is it a 20-day high? Okay? Well, if I go look at CMG and I say, is this an indicator of a 20-day high? The answer would be, yes, it is. 20-day high. Now, James, I like to see that it's hitting both highs. Okay? You're just looking for more confirmation. Okay? Now, when you say that, do you really mean that? Are you going to get in if it's both? Or are you just wanting to you're trying to delay the entry? Okay? I'm going to show you T-Moose next. Okay? So when we go back, we're going to send that order, confirm and send the order. Now, one of the things that we actually saw when I bring up, let's say, T-Mobile, okay? So what happened last week? Apple announced their new phones. Those who have Samsung devices maybe really thought about giving up those devices and converting, if you will, to a more potential superior product. I'm joking. I just want to make sure you're listening. Okay. Now, there's been some unusual activity in the phone carriers. Number one, T-Moose, which, by the way, if you ran the script that we talked about last week, the scan, that was a stock that was in that area of a 20, 30 period moving average, a 10 period moving average, a little bounce, doink, doink. Okay. Little bounce there. Now, someone might say, well, I'm late. I can't get in. We're at the all-time high. Well, here's the bottom line. We know that those stocks run up, and there might be a pretty good chance that it might exhale or maybe kind of pull back down just gently, perhaps, to the rising upward trending moving averages. Okay? Now, notice on it's not just T-Moose. It'd be hard not to see AT&T because AT&T doesn't normally move like this. And if you pulled up, let's say, Verizon, okay, it doesn't normally move like this. So if you were looking at all, it would be hard not to see that and connect the dots. What's T-Mobile? What's AT&T? What? Oh, phone carriers. La la. Now, if I take a look at this, we're going to choose the one that might have a little bit more growth to it. Okay. Now, what I'm going to do is I'm going to put a buy limit order at Friday's closing price. Okay. We're going to right click. We're going to buy custom. We're going to with OCO bracket. No, wait. What indicator are we using? Okay, so T-Mobile, what's the trend? 3. Now, by the way, what is your favorite number? 1, 2, 3, 4, 5. What's your favorite color? Obviously. So we got trend actually number 3 there on the daily, 3 on the weekly. Look at the implied volatility, 90. Mother. Okay? So when you come and look at these different time durations, relative strength pasted in that green color. Now, if we said what indicator? It's a bullish bounce. It's a 20-day high. Give me the 55. Okay, it's both. Now, does this mean it's better if it's just green all across the line? And is it guaranteed to make money? It doesn't. Now, if it's green all the way across the line, you would sure think you would see it, right? If you had it. Okay. Now, when was the cross? It was a day ago on the whole moving averages. And it happened 4 days and 2 days ago, okay, on that 20, okay, the whole moving average. Now, what I'm going to do is I'm going to go back to this. I'm going to pull it up, and I'm just having to have a little fun with you. I think sometimes we're too serious when it comes to stock investing. I think I should always be serious, okay? Well, what I'm going to do on this is I'm going to right-click on the chart, put my order right here. I want to go back to that. And what I want to do is I want to pull up a chart that has a whole moving average on it, okay? And what I'm going to do is I'm going to kind of zoom in on that. And let me take off the RSI and the stochastics, okay? So I want to put my order right about probably the high from Friday, okay? It's about 203, okay? Let's say 203.50. Pretty dang close, okay? I'm off by a quarter. So if we go down to 203.50, I'm trying to put my order right here. Why are we not getting in at this very moment? Well, when you look at typical bull flags, you tend to go up 5 to 7 days. if you get a standard bull flag, and then you pull back maybe 1 to 3 if you get a short-term pullback. We are trying to catch the pullback, okay? We're trying to catch the pullback on a red candle day. Now, if we look at kind of where this breakout might have occurred, okay, the old high-ish area, we kind of drew this across, probably right about $200.80. If I put that there, $200.80, less 2%, I'm going to put the stop at 196.78. 196.78. Now remember, the stop is not valid until the stock is entered. We're going to go dated GTC. Okay, there's the entry. There's actually target, which we're going to talk about. There's the stop. Need to change the stop to dated GTC. Now, what we could do, given that it's making the pull right now, Isaiah, I'm going to come to your question in just a moment. If we kind of said, look, where might this pullback come if it comes, okay? I'm going to kind of put it right here. What I'm going to do now is I'm going to measure this pull, which we did, and activate it. And if we were to pull back just kind of a little bit, kind of to that white oval, okay? And if we were to continue up in that trend, now if we get enough Samsung people to convert to potentially more superior phones, I'm joking, okay? We're going to put it, have you ever noticed that they just don't come? They just don't want to come, okay? 217.21. So I'm taking this little rally there, pullback, and wondering, could that trend happen again? Now, sometimes patterns repeat themselves. And I'm going to put that target right at 217 and a stop underneath here. So here's what I'm going to tell you. In my 25 years of investing, I don't use 52 different indicators. What's funny is all these different other 50 different indicators, they're derivatives of the ones that we use daily. Now, let's kind of speak to Isaiah for just a sec. But when I do this, before I go to Isaiah's question, I'm going to put the order right there. Got a target, got a stop. The stop, read what it says right there. Okay. What's the commission? There it is. Now, on this, one thing I do see that stands out is that is just too big of a position. We're going to put this in the IRA because we're going to try to buy 100 shares of that stock, and that would be suitable for the IRA, but not the margin. If I had a little bit more time, and actually I do, I'm going to go multiple accounts. I'm going to do about how many shares? On that account, we're probably going to look at about 30 shares there for the margin and about 100 for the IRA. All we had to do is go to multiple accounts, margin, IRA, and what it's going to do is it's going to put that stock in each one of the accounts, okay? So it's going to double up. 30 shares in the margin, 100 shares in the IRA. The target and the stop are same on both accounts. I'm going to send the order, and now what you're going to see is that order sitting right there. Okay, now, Isaiah's question, okay, is how do I actually use the script after I import it, okay? So one of the things is, Isaiah, that's kind of like what we're doing as we're, now if you imported it, okay, if you go to, let's say, Market Watch, just briefly, if you go to Market Watch, go to any of the column headings. Once you import it, you want to right-click on any of the column heading, any of them, and then go to where it says Customize, okay? If you click on where it says Customize, you want to go to actually, what did you call it? And then make sure that you move it to the right. Repeat, right-click on the column heading. Click Customize. On the left-hand side are the available items. Whatever you called it, put it to the right-hand side. That's your current set or the view of the columns now. And now what you're going to, second part of that question is, how do I use it? Well, that's what we've been doing right now. Now, this kind of brings up a good question. Why in the world would I actually subscribe to the Trader Talks channel by Schwab Coaching? So when you subscribe to the Trader Talks channel Schwab Coaching, if I typed in, let's say, Scripps James Boyd, okay? So you're going to see that there's a little search icon, okay? When you subscribe, which is free, You could say, I want to search on this Trader Talk Schwab coaching, anything to do with scripts, okay? James Boyd, whatever. And you could just put whatever coach you want to follow. One of them that I would suggest, okay, is this one right here that I did back in January 29. You realize all this stuff is just in the palm of your hand? When I got started, we didn't have any of this stuff. I was on dial-up AOL connection, okay? We had none of this. Stop looking, it's here in one view. So if someone said to me, I don't know how do I start from the beginning and then how do I use it once I have it, I would tell someone to look at this video, which I showed you how to find it, and I would look at that video because that is a greatest hits of learning to use those scripts all together and what it's telling you, okay? Now, I'm out of my time here today. The time always goes by so fast. So number one, if you have not subscribed to the Trader Talk channel, it's the easiest thing to do. Just go to YouTube, type in Trader Talks by Trader Talk Schwab Coaching, and then just click right in the top middle of the page, subscribe. You'll see that little icon right there. Also, stay tuned for Michael Fairborn coming up next on covered calls and short puts. Here is also the webcast calendar for our classes, okay? And Michael Fairborn coming up next. I want to thank you so much for your comments and your participation. We actually use those scripts in finding new positions, but also we saw it here today. We have almost a barren portfolio. So today and tomorrow, we kind of have to really be in the process of kind of rebuilding the portfolio, and which we'll pick back up tomorrow morning. Thank you, Cameron. Stay tuned for Michael Fairborn coming up next. Take care. Bye-bye.